The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 26th day of March, just about to wrap up the month. Got another few days to go. Going to be a very interesting close. I'll talk about that in a moment because it has to do with monthly candles, and we've already had a weekly candle going below the level I looked at for the Dow, the 24,200 level. So let's get on with it. The Dow is rallying quite nicely. It's up 340. It was up much more earlier on. It's at 23,800. The S&P is up 28 at 2616. The comp index is up 75 at 7,087. The VIX index is actually at 2312. It's down $1.79. Still pretty high. The E-mini you can see right here up 19. Made that arch formation. Went to the 200 period moving average. So over the past 2.5 months, from the February low, it went under the 200 period moving average, that orange level, to the 25.3250 area. So that was a 350 point decline from the 28.83 high that was made 29th of January at peak D. Pulls back, makes an arch formation, rallies quite strongly and goes to the 28.07 level, another peak D in the Chapman wave methodology, and then plummets very sharply, but not as sharp as the original January to February decline. So far, we can call this an inside bar if you had to look at it in a bigger time frame. But the MACD is very, very weak. The stochastic has reached the 17% level. That's where you can get a bounce. I've got a very oversold level, but not a very, very oversold level. The on-balance volume, in fact, has gone deeper and is turning up. That's a good sign. But if I'm looking at the weekly chart, and I spent quite some time with my subscribers to my opening call over the weekend, getting ready for the webinar coming up tomorrow night a week on the value and the impetus and the power of a peak D, the fourth highest peak. Look at this weekly chart, 28.82, way down to 25.32 in one foul move. And then it rallies up to a B, and it's like a B minus because it's failing. There's that H pattern, the dreaded H I always talk about. Here's a 120-minute chart in the E-mini, up 20 right now, made a single leg A, pulls back sharply. Now I think it's going to try to work its way at 26.19 towards the 26.22s, maybe 26.5 areas. I have a target of the 26.50s, and then we're going to have to reassess to see what's happening. Let me just do this quickly. I want to just show something very interesting. Look, gold at this particular point, I think it's up. Yes, it's still up 5. It's in leg B. I call it a gray leg B. It's breaking as we speak. The day's young of the daily chart, but so far it's breaking over the resistance downtrend line. I know it's a little rare for you to hear me do this in my opening call. We are long gold. We've been long since since last week. So the anticipation was that in this environment, especially because of the weakness in the XLF, that is the financials, it's suggesting that money might start to go, just for a safety factor, into gold. And in terms of the market, money might, we'll see if it does, go into bonds, but as of now, we don't quite have that. So what I'm really looking at here is I'm looking at time frames. So the real question is, let me just get out of this for a moment because this is something I want to talk about today. Within the daily chart, if you look at the XLF, you'll see that I'm just going to do it historically on a daily basis. You see that the MACD is pulled back quite sharply. Let me squeeze this. We're only looking at the MACD and the stochastic, the technicals. You'll see that the stochastic is at 17%. It's just gone. This is the XLF Financial S&P Select Spider Fund. It's just under the 20% level, and every time it's gotten there before, it's either started a rally and then failed, or it's had a really good rally. But look, if I do a vertical line right here, you had a lot more to go to the downside, even though it was extremely oversold. And even with these ones right here back in August of 2017, it still had to go to the low that was made later on. I think it was in September 18th or so of 2017. That second low in the stochastic where the MACD turned up, that's really where you got your big move. So a question a couple of people have asked, and I've been asking myself because I keep referring to the fabulous work that Dave White has done with his oscillator line. And those levels are extremely oversold. But if it's a 9-period look-back period, look, you've had a straight down move. Where it's all choppy like this, you're not going to get that kind of power to the downside. So you're looking at the balance, the weighting, W-E-I-G-H-T, of the wait period, that's the time period, where you've got the oscillation accelerating the downside because your look-back period of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 bars is just straight down. Same as when it was going up, it went straight up. So I love that. I love the aspect of this whole new indicator telling us a tremendous amount. My contention is I have to go with the bigger picture, the larger tide. So yes, there could be a very strong move. Let's say in the XLF, there could be a strong move. Let's go to the QQQs, which are the ones that held the best and are now very, very weak technically. I'm looking at this and I'm saying you can get a very strong move in the oscillator. It doesn't even have to go to the above the rectangle top, but it can go towards the top. But you could fail to get that kind of impetus to the upside in something like the Qs when the weekly chart has been making higher price but lower technicals for a while. It's showing me that there's internal weakness in something like the Power Shares QQQ Trust Series, and I have to trust my instincts because the monthly charts are still in leg D. In the XLK, it's only in leg C. Look, here it comes. So I'm trying to put this picture together. I have no choice on a purely technical basis in the Chapman Wave methodology to say that the daily XLK, Select Spider Tech Fund, is in a sell mode, and the weekly on Friday went to a sell mode with a close, deep close under the 9-period moving average and very weak technicals. So here I am looking at the monthly chart saying, hey, it's only in a C, and you're supposed to go to D's before you get really nervous. What's going on? So what I am looking at is within the context of where we are, and that's what we tried to do this morning, we're holding our short positions, but we attempted to buy some long positions for this particular, what I call a counter trend move to the upside. And then we're just going to have to let, que sera, sera, we'll just have to let the market tell us which is going to be the winner in this. And if I can go to the email short term, look, little breakout in the leg chart. It seems at 26.23, trying to technically go for the 26.29. I'll be right back. Basil Chapman, Tiger Technicians Hour. We've got a lot more to discuss the concept.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, so a couple of questions I want to deal with here. One was a statement, just an out-and-out statement I got. Where did we go to? Can't find it right now. Oh, there it is. Paul says, the market is acting very irrational now. This is what major tops are made of. You know, I don't, when you say major top, if you mean the top, I don't think this is the top. I do believe that this is going to be we've made a top. January the 26th in the S&P and the Dow is pretty much a top of some consequence, intermediate term. I don't think it's the top for a number of reasons as I was doing my work over the weekend. But I have to tell you, I'm going to go through this again. I was asked in the den just a quick question about GG, which is Gold Core, trading at $13.90 up 8 cents. What do I think of it? I like it very much. Monthly chart is okay. Weekly chart is improved after that inverted V. But the daily chart is acting nicely because the stochastic is at 84%, which is good. The MACD is improving. It has 13.50 as the 9-period exponential moving and the 200-period moving average support, and 9 is crossing the 9 is about to cross the 200. That's usually good for at least a short while. Look what happened last time. It happened back in January. It ran from the 1340s all the way to the high peak C1, peak C2, Chapman wave methodology. 1555 was the high. So, and this one's made a quicker leg D. I don't like Ds way under the previous peak C. I like them to break out and go to all-time highs. So this is good action. Now, the question is, should I be buying it here if I haven't got it? And my answer is if it's part of a portfolio, I'd say yes. If it's just your only gold stock, it's acting very well, but you kind of lost the risk reward because the 1398 in leg D, it doesn't mean that it could pull back, but I see the 1350s, maybe 1330s as very strong support. So I'm saying as an initial starter position, yes, you could buy it here, but you got to have it as a planned entry. One here at 1399, one at 13, maybe 60 or 1350. And then one outlandish one that you hold off now because it's going to be much lower down. And if you only get one and you miss the other two, big deal. At least you're in the right track. You can always add to the position because once it gets to 14.35 area, that's a really good chance that it's going to try to tackle the most recent high of 1555. If it fails from there, then just think chop, chop, chop sideways. But I think in a way gold is part of the action at this particular point, at least for a little while longer. Next question I had was TLT. Yes, I will go to the TLT. The TLT, this is the Lehman 20-year iShares T-bond ETF. Made a peak D in the Chapman wave back on the 3 days ago. That was on the 22nd of March at 120.82. The weekly chart is okay. It's really not good. It says you might be chopping around here between support at 118s and resistance at 122.70s, upper 122s, I should say, and it could stay there for a while. The monthly chart says, you know, I broke that most important major long-term trend line. I need very quickly, I mean the TLT, need to very quickly get to the 123 so that I can get above the 9-period moving average. Now, let me explain what I'm looking at. This counter trend rally that we're about to see, and it could, if things ameliorate in terms of economic conditions and any news event and impeachment or whatever you name it, guns, you can name anything you want. There's a chance that we could have a very quick rally. Let me show you this. In the Dow, 24,329 is the 9-period exponential moving average, and I am anticipating there's a chance, having hit exactly stopping on the 200-period exponential moving average, that we could have a bounce, and we are still short from way up in the 25,400 area. I'm going to stay short for now. I don't see any reason why to change it. Did attempt to have a long position here as a counter trend rally possibly unfolds. I don't see it in this particular indicator of the MACD and stochastic as being extremely oversold. It went to 14%. I'm expecting that when I see the stochastic in the daily chart of the Dow in the 7% area, 6%, that's where I'm going to start getting very enthusiastic. Right now, this H pattern is something I just have to consider to be a very serious thing. Yes, you can make that U-shaped pattern. That's a successful test. So far, it's a successful test. 23,509 was the low last week. 23,360 was the the 9th of February low. Yes, it could turn out to be an H pattern that reverts successfully to a cup formation with a huge rally. I don't see the rally being in the weekly chart. 24,590s is the resistance. Yes, you could make an M. If we make the M pattern, then what we've done is we're going to go sideways for a long period, many weeks, within a range. And that range says the low 23,000s to the 25,800s could be, in fact, be the range. That's a possibility. Oh, it's a long way up from here if you've got to reverse very poor indicators. My big thing is what I sent I sent so many, I don't know how many charts I sent out over the weekend. I just, every break I got between tennis and whatever else I was doing, I was at my charts. This candle has done exactly what we were talking about. I'd said for a long time, there's a technique here that I developed years ago called the Chapman wave Roman candle. My experience is that if there's a price in a shorter time frame, remember this is a monthly chart, a shorter time frame that goes below halfway into the wick, the lower wick, at some point there'll be a test of the lows. You might go just to the low, you might break the low, you might even just nick it and then bounce. But that low of 23,360, it becomes a magnet. Now, look at this. If you're looking at this particular index, last week we closed at 23,509. I said 24,200, under 24,300 to 200. And then I said, I'm going to make it 200. And I want a little bit of room. Hey, a little bit of room, 400, 500 points lower. This says to me that the best case is going to be a lowercase h that goes to a lowercase m in the weekly chart, and that there's still a really good chance that we will be testing the 23,360 level. But what's really even more interesting is if I can find the darn thing. Where did I put it? Here it is. So I discussed this over the weekend with subscribers. I didn't discuss it. I mentioned what I'm looking at. But look at this. This is the first time since, what did I say? Oh, wait, did I write that up? Did I write that up? Yep, I wrote it up. This is the first time, this is what I sent out. At 25,533 in the weekly chart of the Dow, this is the first time that the 7-period exponential moving average, this is a chart we've been looking at for weeks and weeks and weeks. This is the first time since the breakout in 2016, I think it was November, where the 7-period EMA went above the 9-period exponential moving average. This is the first time that it closed below, not only that, it closed below the 20-period EMA as well. I take that seriously. I'll be back. We'll talk about the market. Basil Chapman, Tiger Technicians Hour. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Explain why I believe that patterns repeat, they're fractals. The fractals are really of human nature, so they repeat over and over. Remember, I spoke about the lowercase h pattern. I have for my webinar coming up. Folks, if you're interested in my work, in my my newsletter, the opening call goes out every single day of the year, except even when I'm on vacation. But I do try occasionally to take a day off. But most importantly, these are patterns that I talk about all the time. You see this lower case, you see the H pattern here that failed in this Bitcoin. You see this H pattern I spoke about last week. I said, yep, it should be a little bit of a bounce, but I think it's going to stay in the H pattern, maybe go to an M pattern. Look at the little M pattern here it's trying to make. I don't see anything yet. And remember, I spoke about this over the weekend, the January the 1st weekend. I said, wow, everywhere I went, people were talking about Bitcoin, no stocks, no nothing, just Bitcoin. That must be a major top in 20,000 area. And I don't think we're going to see that for a long time. And then I said, back in late February, early March, I said, every single time I tune into one of them financial programs, someone's talking about Bitcoin going to 40,000 and 50,000. I don't see it for a long time. It needs to consolidate. That's what I think is going on. It's a big, big consolidation. It bubbled, and now it needs to resolve that. It wasn't a big bubble. It was really a bubble. It's going to make a huge bubble later on with the whole market, and that's what I'm really looking for. So here we go. So I'm looking at this pattern of the H pattern here in the Dow. I'm expecting we could get a right shoulder arch formation that comes back to test. A lot of it based on the monthly Chapman Wave Roman candle, a lot of it based on the weekly, a lot of it based on patterns that repeat. Look at the MACD. It's negative, but it's not overly negative right now, but it's negative. Stochastic's only at 14%. It's not at 7%, so it's 14%. I don't see this as being extremely oversold. And my biggest disappointment was over the weekend, I sent out all these charts. I said, I'll update my subscribers Sunday night, because if the futures are down huge, we will get a crash type market on Monday, and then we can get the V-shaped recovery as the VIX screams to the upside and then starts to go down all the rest of the week as the market goes up all the rest of the week. But if we get a rally before then, it's usurped energy, much needed energy for a climactic low, and all we're going to do is see a bounce. Could be a really decent bounce, but we'll be back to retest those lows. And that's kind of the way I'm seeing it right now. That's number one. Number two is, within the context of the questions I had, let me just go to this quickly. I was asked about Citibank. Look, why is Citibank, look at that peak D in the weekly chart. Look at the peak F in the daily chart. Look at the peak E in the monthly chart. I don't think the XLF, I don't think these banks are going to just suddenly recover right now and go to new highs. I think they need a digestive phase. If you look at, what was the question, Citibank? Oh, I had the list right here. Let me get it. Am I going to have to do that again? It was right in front of me. And what was the question? And the question was, okay, there we go. Basil, oh, there we are. Oh, okay, good. JP Morgan, JP Morgan. Where did I type that in? Of course, I typed it into the den because I was looking at the den. Okay, Chapman Wave. Come on, what do you get? Peak D, major top in JP Morgan. I'm having a webinar on these peak Ds. How many Ds have you seen over the last week? I mean, I've just lost count. Look at this, peak D in the JP Morgan trading at 110.24, up 3.24, not good enough. Peak D in the daily, very weak. Missed going to the left side low in the 1.6s, and so an arch formation. Weekly chart, technicals are very poor. I think it might go down and retest the low that was made back in February, the week of the 9th, of 103.98. It's trading at 110 right now. Weekly chart is still only a C, so that's very good for JP Morgan looking out. Double check, double check. Yes, that's the way it is. Oh, wait a minute. Yep, only a leg C in the weekly chart. So we can go through this. So the question is, what does it mean for these financials to be doing this right now? What I think it is saying, and this is going to be putting me to the test, let me tell you, is that there's a chance that even though I've got, I can't do it right now, even though I've got weekly charts saying that in the 10-year and 5-year yields, we've already made significant tops at a peak D and a peak E. There's a missing peak C, missing D going to the 30-year. The 10 and the 5 are the leading the leading yield indicators for everything that counts. That's how they measured. And what I'm looking at is right here, it's within a trading band with the yield high of 32.21, 3.221 in the 30-year, trading right now 30.68, 2 points down. So a little less than 2. But look how the 10-year is holding steady, and the 5-year has made a peak E if there's no new high this week. And I'm suspecting that if this market goes back to being weak, you'll see some money flow from equities into the fixed income like bonds. But this is a period right now that says if there's a counter trend rally, we could see yields slip a little bit more as the market has a pretty decent bounce. And I am expecting a pretty decent, is this a low of consequences? I just don't think it is based on my weekly charts. They will change if the market really screams to the upside. So let me just assess it as best I can. If you're looking at the QQQ right now, trading at 161.56, up $3. That candle of Friday was really ugly. So you have 2 bars in which to close above 161.96, the low that was made in this arch formation back on the 2nd of March. If it does that by tomorrow at the latest, that's going to be 161.96. We're at 161.51. It could do that today. That's going to say to me, good. Now the 165.05 level would be the next level of resistance. We are still remaining short. We've taken nice profits Friday, and I'm looking at this some profits, and we've been short since 1 point off the all-time high. We've got a little room here, and let me draw in the pattern that I'm anticipating. I'm anticipating an arch formation, and then there's going to be some kind of news, and that arch formation says, yeah, you could rally all the way to the 165's 9-period moving average, even above that, and then we'll have to assess. The thing about this candle right here, the ugly candle of last week in the Qs, is that we've seen that before, and then normally I would say you can see an inside rally of a shorter time frame going to a D, but it should stop just at, just on, or just above the previous high. It was the high of the week of the 26th of January of 170.95 in the Qs. We went above that. We went sharply above that. We went almost 5 points above it to 175.21. That means that I'll be getting a parallel kind of pattern here. I'm not sure that's the case. So I'm going to be having to watch it because this is a very unusual chart formation. Not the monthly, but the weekly, having gone this high in a V-shaped formation and closing at twice above 170.95. I'll be back. We want to look at high-grade copper. We want to look at crude oil. We want to look at a lot of things. And I'll be back. We've got questions, a lot of questions. I'll deal with it all when we get back. Basil Chapman, 37.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So high-grade copper, 12% in the stochastic and the daily. MACD is still very, very ugly, but it is trying to get some kind of support here at 2.97. I think it's going to be tough to do. The weekly chart is still very ugly. It has 2.88 now as the 200-period moving average support. The monthly chart is under after a peak E-top in a failed right side, left side cup formation in the continuous contract of the monthly chart. Copper is very weak, and that to me is a bit of a tell. Now, talking about a tell, we had Cintas. I didn't do anything over the weekend about this. I should have. It had a huge move up after earnings report. Now it's at 168.81, up 0.96. It made a peak C1, C2 all-time high at 178.34 on the 9th of February. Peak E with a Chapman wave 2-bar reversal, weekly chart. And it hasn't given me I haven't got a down arrow yet, and it's in a leg D in the monthly chart. This is overalls, uniform rentals, and this is telling me keep a watch on, an eye out for the potential for some kind of a mini recession. I think one is unfolding right now. It's selective, so you don't really see it. And the other thing that I wanted to show, if I can take it right here, I'll do it live on the white background chart. The HGX, which is the Philadelphia Housing Sector Index. So it's not Philadelphia housing, it is the sector. It's called the Philly Exchange Index. And that made a peak G daily. I think it could turn out to be an F. Well, it's got an F/C monthly, but it's really the way that it's been acting with the yields. Look, peak F top in the Chapman wave in the weekly chart. This is going to be very important. So housing, if you look at some, for instance, we've still got Pulte Homes as a short from the 33s, 33.5. High, all-time high peak F is 35.21. Peak E in the monthly. Pulte Group Home Builders hasn't broken down, but it's really struggling here. And that has to do somewhat with interest rates, somewhat, I think somewhat with the overbought. Look at Home Depot. Isn't Home Depot telling us things are not so kosher in the whole building material, home, electric, appliance area? I think so. I don't think Amazon's made that kind of an impact. Look at that peak D. I couldn't even tell you. Look at this. Peak D, Home Depot, all-time high. Amazon, peak, whoops, type it onto the chart. No, type in a little square. Okay, AMZN. Amazon makes an all-time high. How many times am I going to type that in? There it is. Peak D at 1617 on the 13th. Google, I'm going to Goog. Peak D high on the 11th, I think it is, of March of, yep, right there. So it's 1177.05 on the 12th. 1176.76. Chapman wave peak D 2-bar reversal plunges to the 200-period moving average. I mean, I'm just doing dailies. They go to the weeklies as well. Netflix. What did Netflix do? Netflix peak D. I mean, I don't know. So I'm having a webinar on the power of the peak D and how you identify it, how you can look at the MACD and stochastic for help. Netflix hasn't broken down yet. It's very interesting. It has made a peak D in the weekly as well, but it's still holding pretty darn well. I have got a sell mode indication in the daily. Weekly is just still a plus sign. It hasn't got any. This is still one of the best out of all the real big cap Nasdaq stocks. Facebook peak D weekly, peak D monthly, and peak D. The hat trick, and I had a peak D in the 120 minute, I believe, at 195.32 on the first. How many peak Ds can you see? Fourth highest peak in the Chapman wave methodology. Having a webinar Tuesday night a week, and I'll be discussing what I think is going to happen over the coming months, going to the summer and in the summer. Next question I had was Dow. Is the Dow parabolic? Is this parabolic move into January highs? Doesn't it look like the 2000s? Yes, it does look like the 2000s. Oh, I spent a lot of time doing a lot of work on the 2000 top. There are characteristics here that are different. I do not see, for instance, I did this on purpose the other day. Last week, during the week, I don't often do it. I played tennis during the week during market hours, and I was at a club I don't usually go to. I was a guest. And I'm walking along and I'm going on. All I do now when I go to clubs, that is health clubs, I look at the tickers, at the monitors. I want to see who's looking at the CNBC or Bloomberg or anything to do with financial news. No one. There wasn't one single ticker. And in 2000, I could see the ticker on the tennis court because it was facing, they had it facing the courts in that big window on the second floor so that you could see it way back on court 6. I mean, this is very different. We are not there yet. We will get there, and it's going to be a worldwide and worldwide international blow-off top. That's what I'm thinking. That's why I think this is a serious pullback. I'm worried about the monthly charts, but I do believe that it isn't the top. It is just a top, and we will get a pretty good rebound a little later on. It needs time. All right, next question was UN transports. IYTs, the iShares Transportation Index, or ETF. Yep, pulled back very sharply. It went to a peak E in the weekly chart, peak E in the monthly chart, and that was also Chapman Wave 5, and a peak E in the daily. So it's a hat trick top. I think that this is telling me, I think that and there's a Roman candle. It hasn't closed on a weekly. Oh, it did. It closed last week at 182.42. No, it's right on the border. 182. Yes, I think it did. The iShares Transportation average the week of the last week, the week of the 23rd, did close in the weekly chart to give a reading in the monthly chart that says, watch out, there's a very good chance they're going to go to the low area of the February 9th candle in the 176s is at 184. That's just a heads up. Could be wrong because it's on the border, but that's the way I have to read it if I'm very strict about my rule, and I am very strict about my rule. Triple M, question about Triple M. What's the question? Oh, just the Chapman wave. So look at this. This is very interesting. Below the left side low, a little drink of water there. Monthly candle, just went right through the Roman candle of last month. It went right through the low of that candle for the weekly chart in the dreaded H pattern, and it closed below it. It has 2 bars. It has that bar, and this week to close above 218.18, otherwise it's going even lower, and the weekly chart says watch out below. Yeah, this is the reason why I have to be very careful. Questioning the gem, what about Goldman Sachs? Yeah, this is what I'm saying. Goldman Sachs held the 200-period exponential moving average On the daily chart, technicals look very weak. Weekly chart is weakening. I think it's got a little more to go to the downside, but it's going to be a big clue on that XLF for the question in the den when the next big rally starts. Basil Chapman, Tiger Technicians Hour on this 26th day of March. Dow's up 372, S&P's up 43. I'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability, and last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So let's get to this quickly. The Dow, Hong Kong Dow. This is the exact pattern of the HK index, but it is based on the Dow Jones Hong Kong index. So the prices number is different. The pattern is exactly the same. It is at a peak C, and that suggests that it's going to be going a lot higher. I didn't do the FXI. I should have done the FXI. I haven't notated it for a while. A, B, C. It's at peak D. In the cup breakout pattern in the Hong Kong index, the HKDOW, this cup, this is called the Chapman Wave Cup and Ladle breakout pattern. That should go to at least a D. So this is very positive. It's like the JP Morgan chart, but not the FXI, which is the China 225, is that what it's called? Now it changes every couple of years. They change the name. It is now called the iShares China Large Cap. Okay, so the large cap A, B, C, this is a peak D, and it's consolidating. So that says it hasn't closed. Yes, it did. It closed above. No, it didn't. 52.85 was the high in April of 2015. 54, round number high, was the high in January. So I'm going to be watching that. But if you look at the D, this is the DAX. The DAX has made a peak F. I mean, I don't see how I can count it any other way at this point. The peak F with the technicals failing. The Great Britain chart, GBDOW. That's why I'm getting a little nervous here. Peak F in the Great Britain, a monthly chart. I don't know what to say. I'm just looking at the charts, that's all. So that says to me, I'm going to stay in the short positions that we have. That's the Dow, the SMHs, if we can, the QQQs within a dollar of the all-time high. Good positions, so I don't want to change that. Within that, I'm prepared to try to chop around here for the bounce that I anticipate should come. Okay, so the question I had, a good question, was, so how does BA and the others fit into that category? Well, Boeing, to me, it's up $4 at $325. I think it's made a potential hat-trick top. I think a good few months of Boeing consolidating. Hope that helps you. Please check out my opening call. I think you'll find it profitable, hopefully. We've had some wonderful gains on the short side here the last week or two, and I hope you can get a lot out of it. Don't forget, you can subscribe to my Think Free. Check out the front page of TFNN.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.